Welcome back to the watch list. Right now, we're going to take a closer look at Airbnb. Shares of the company actually higher today, up about 1.3%. And it's actually been an outperformer this month as well. Amid a sea of red, Airbnb shares up about 2%. Tomorrow marks 3 weeks since strict rules went into place here in New York City. For insights into this, let's bring in our panel. Dan Wasiolek is Senior Equity Analyst at Morningstar, and J.R. Gondek is Managing Director with the Lerner Group at Hightower Advisors. Dan, let's start with you because I think we're still trying to connect with J.R. But just, it's been a few weeks since New York City cracked down on Airbnb shares. Seems like it could be a big deal for Airbnb. But talk to us about the impact, because it certainly hasn't had much of an impact on the stock. What about in terms of listings and business for Airbnb?
Yeah, so I think when you look at the listings, it has a big impact in that at the beginning of this year, there was around 40,000 listings in New York City on Airbnb. That's, currently below 10,000, where it probably will, gravitate for at least the foreseeable future. But as far as the impact to Airbnb, it's worth noting that New York generated 85 million in total revenue in 2022, and that equates to 1% about of their total revenue. So the actual impact here of the listings going down in New York should not have that meaningful of impact to the financials. And I think that's why, as you alluded, the share price hasn't reacted all that much. We can also kind of point to the overall regulatory environment. And actually, what we have found in our research is the regulatory environment was a lot more stricter and uncertain several years ago. At that time, at the end of last decade, you had many cities, Paris, Sydney, Tokyo, Berlin, applying some restrictive policy. Fast forward to today, Airbnb has gotten through those regulatory periods. And in fact, with Berlin, they overturned essentially a full ban of short-term rentals in 2016 with a law that reversed that in 2018. So you always have to monitor the regulatory environment for a company like Airbnb, but we do think they'll be able to manage through this current period with New York City.
Well, you bring up a good point by talking about some of the international markets that Airbnb isn't a company that just operates here in the United States. So I guess, is New York City just a small piece of the pie? What are the key markets that Airbnb is really looking to expand the most in?
Well, you just said it. It's a global company. So, in fact, when you look at any particular city, there's no city that's going to be generating more than a very low single-digit % of their total revenue. I mean, New York is was in 2022, one of their larger markets. But again, it only constituted 1% of revenue. So, I mean, the great thing about a global travel platform like Airbnb and its peers, Booking Holdings and Expedia, is as there are situations, whether it be regulatory or, perhaps weather-related types of issues in markets or geopolitical issues in markets, people that were planning to travel to that market, well, they still want to travel, so they just kind of shift their travel to other areas.
All right, Dan, just a heads up, we're still having trouble connecting with JR, so this is a panel of one, just in case you were wondering. So I hope you're ready to answer a few more questions. I want to talk to you about price target, because I know that JR has a price target through 2024 of 180 for Airbnb. Yours is a little more cautious. I saw you had a one of 128. Airbnb is currently trading at 133.69, so below that, but it sounds like maybe you're going to adjust that a bit.
Yeah, so our price target was 128 after, going into the second quarter. It since has increased and currently is 132. So kind of where the stock price is. So that equates to essentially a forward EV to EBITDA multiple of 20 times, which is a commonly used metric in the industry. We think that's reasonable. Our forecast over the next 5 years is for EBITDA growth of around 16% on average. And so a 20 times multiple, we think, is pretty reasonable for that level of growth. Perhaps it's worth mentioning, this is a name that can be volatile, even right or wrong. It can trade with the technology industry. When tech was hot and IPO market was hot, we saw shares rise well above $200. The multiple we felt was very inflated at that time. It since has kind of come back into a fair value territory for us, which we think makes sense. But yeah, it kind of fluctuates through how people are viewing technology companies. This is a highly profitable company, so this is not a company that necessarily needs the debt markets. It really doesn't. Its free cash flow and balance sheet are quite stout. So it shouldn't really trade with kind of those companies when there is a concern in the marketplace for those unprofitable tech companies, but it can occasionally. So we always have said Airbnb is a great company. When it was trading at $200 per share, we didn't think it was a great stock. Right now, it's kind of getting into an interesting territory for us. If it were to correct related to New York issues, we would, all else equal, view that as an opportunity.
All right, so you'd buy the dip. You have 5 seconds. A company that you'd like better than Airbnb right now?
Well, as a stock, Expedia, we think that trades at a EV to EBITDA multiple of 5 times. It still gives you growth. They've redone their platform. I think they're going to harvest the benefits of that investment.
All right, Dan Wasiolek, thanks so much for being our panel of one, and thank all of you for watching.